Hello, fellow traders. It is I, the Rumpled One, coming to you Thursday, February the 13th. The year's 2020. Let's talk trading. Risk is everything. I was on Reddit this morning. Something came in my email, and one of the posters was asking about indicators. And there was this detailed explanation given. I agreed with some of it, and some of it I didn't. And one of the things, as I realized, was there is a lot of confirmation bias in people who trade. We all look to prove what we want to prove. But in science, you do the opposite, where if you have a theory, you do everything you can to disprove it. And then if you can't disprove it, well, then I guess you got a good theory. So, when it comes to trading, anybody that's been following me knows that I say things that are almost heresy, such as there is no trend, support and resistance, supply, demand. All these things are conceptual in nature. I mean, this just goes against the the traditional trading teachings. And not only that, then of course I start, calling people names like, oh, you're just a squiggly, people who use indicators that oscillators, moving averages, and things like that. And, you know, if you study any, I guess, human psychology, you'll see that there's something called cognitive dissonance and then once again confirmation bias. And people just, they want to protect their belief system. And so if you want to convince somebody, you have to let them know that it's okay for them to have a change of heart, basically, because you don't want the worst thing that can happen is if you tell somebody something that they really believe and it's wrong, they're going to probably fight you over it because it's going to be a blow to their ego. I mean, for how long did mankind believe the world is flat? So what's all this got to do? I say risk is everything. Well, when you put a trade on, you're taking a risk. I mean, really, trading is taking a risk. In other words, you're believing or you're thinking or you're hoping, you're wishing, you're praying that when you put that trade on, it goes in your favor and that you get to exit that trade with profit. But sometimes it doesn't work out that way. And so you're going to wind up exiting that trade with a loss. And that's why, see, risk is everything. And so that's why it's so important. Now, I know you guys could see this coming from a mile away if you've been watching my videos, that it's so important that you don't lose any more than you're willing to lose on any one single trade. Because that's really what trading is. You're putting up something, you're risking part of your portfolio, part of your money, in the hope, in the expectation of making more money. But sometimes things don't work out as you planned. And the thing is, there's nothing you can do about that. I mean, it's part of the game. It just really is part of the game. And speaking about games, last night I was shooting pool. I lost, I don't know, something like 5 or 6 games in a row. And I mean, I lost them because I blew a 8-ball shot or blew the shot before the 8-ball and got taken out. It was just one of those off nights. Okay, back to trading. Boys and girls, fellow traders, you know these videos are for educational purposes only, and your results may differ from mine, and that trading is risky, as I just mentioned. Trading is risk, right? So, if you need trading advice, financial advice, or investing advice, seek it from an accredited financial professional. That way, if you take their advice and you lose your money, you know you got your advice from an accredited financial professional. You know, one of those people that has that certificate hanging on the wall. Yes, one of those people. Rather than taking it from some guy with a funny name who posts YouTube videos, or somebody that sends out emails, or somebody that posts on Reddit or Facebook, or who knows where they're posting, Instagram, or sends out tweets on Twitter, blogger. Yeah, those people. Okay, let's get down to trading. Weekly chart, all gaps are filled. The dollar yen is sitting here in the upper wick zone of the previous week's candle. And there's been 57 pips of movement here for the week on dollar yen, but we've had a pretty pretty nice day range happening here. Now, there's something I want you guys to see, and you don't need any indicators to see it. But, once again, I keep talking about the wicks, the high and the low and the top and the bottom of these candles. Well, if you look right here, you see that was the lowest daily open, over the past 4 or 5 days, 6 days, right? Well, do you see how prices closed above that? Actually, so you see how prices closed above this point? And then, so today price it dropped below it, okay? And then it started to come back. And you can see right here, right about, 109.68, 67. That's where that mark is, and we had a 61 low. So you could have got in about 7 pips off off today's low, which, that'd be a rat zone trade. But see, it's also a wick zone trade coming out of that daily wick. So, and once again, you can just use your eyeballs to see this. It's just like, okay, you could have, used your line tool and plotted a horizontal line, or just gave yourself an alert. Hey, if price drops below here, I want to know because there's an opportunity. Once again, traders, this stuff isn't that difficult. And as you can see here, we actually dropped below the open of the week and came back above. So once again, there's another opportunity. And we are inside the range for the week here, but for the month and the year, you see we're way above it. And here showing how the action, once again, right around the weekly open. Notice here that number 68 just so happened to be the weekly open right here from 1, 2, 3 days ago. And so you see what happened. You got another opportunity to make pips on that crossover. So you can either trade the open itself or wait for the buy zone or the sell zone. Weekly or monthly range 182, average 292. So far, about the month almost halfway over, we've got some movement to look forward to. We're inside that inside bar from 3 days ago, right there once again, which also happened to be the opening range. So we've already gone over that. Still a couple of inside bar trades on the daily if you like that type of trade. The weekly range, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. Over 100. Look at, they're all pound pairs. So if you're really looking for action with that Brexit happening, the pound is where to go. And the new beast, the pound New Zealand, is clocked in at 241 today. And here's the daily H1 lowest open right here. Weekly H1 lowest open was down here. So on the H1, you can see how you had a bunch of opportunities in 1, 2, 3 to get back into that trade if you like trading the holo trades. Pivot got taken out right there. It was within the buy zone, so to be expected. It's almost like if you see the pivot within the buy zone, it's almost a can't miss. But it can miss because remember, these videos are for educational purposes only. So yes, it can miss. And of course, your results may differ from mine. Okay, we can see the new beast pound New Zealand is in the upper rat zone at the moment. But if we switch back to dollar yen, you can see right here the opportunities after that low was put in. And here, once again, given an opportunity. And you can see here, even on the 15-minute chart, if you look at the wicks, see right there, there's that lowest open. And you can see it barely penetrated it, giving you an opportunity to say, hey, let's try it again. And remember how I tell you about these long wicks, or big candles, how price likes to go back to the open. So see here, that big candle went back to the open, this big candle back to the open. But guess what? We got another big candle. You might want to expect price to return to the open. But as always, educational purposes only. Okay, we've taken out the pivot. Here's that weekly pivot I've been mentioning all week. It's Thursday. Doesn't look like it's going to get taken out today. Maybe tomorrow. Maybe we have to wait till next week. Once again, the pivot statistics here, or pivot, the missed pivots that are the ones that haven't been taken out. And these are all the missed pivots. And once again, about risk, you'd have to take the risk that, hey, maybe that pivot might not get hit. But, we look at the statistics, and not the odds, but the statistics. So we say, when we sit down at our trading platform, we have methods and systems that, based on historical performance, they should pan out. And that's what we do. Fellow traders, this is just getting to be almost ridiculous. I call this the price action simple. How simple it is. Here we had the open price, wound up opening right here in between 10 and the 00 and the 10. We know it's not going to stay there. So we took the trade, right here south. And then once again, we know it's not going to stay here. And so it's just something you can play all day long. Now, of course, you can use a 3-ball and only trade in one direction, or you can just say, price ain't going to stay there. I'll take the chance. I don't care which way it goes. In and out of the wick zone. I mean, we see this every day. Here we have the horizontal lines from the previous day, week, and month. Once again, simple horizontal line trades, trading in the direction of the cross. The Einstein line, it's about almost 12:30 New York time, so the traders are out to lunch, and you can see not much happening at the moment. And it's also shown here on the ticks. We got about a 2 or 3 pip range, just not moving much. Here we have the ATR zones, and showing once again, price hit the ATR zone, look for reversal. It came back out. It hit the open minus half the ATR right here. So that would have been a nice little place to take profit. Even if you waited to the exit here, that's still 10 pips. Not a bad trade. Daily range 47. Weekly range 57. And as you can see, not even close to hitting even the halfway point on the weekly range. Let's see, the dollar yen made a lower low today. On the daily, it's made a higher high this week. So no inside bar here. And once again, you can see right here when I've talked about these lines. So right here, there's once again opportunity to get into these virgin wick zones when they were virgin. So here there was 1, 2, 3, and that's it. So fellow traders, just remember, trading is risk. So it's not what you trade, it's how you trade it. So go out there, drain the banks, and hit subscribe, hit like, hit the bell, and post this video.